What's up guys, Ben here and welcome to Motivation to Invest. Tesla is a stock which has continued to skyrocket to the moon despite criticism of a high valuation. But in this video, I'm not going to tell you to invest into Tesla. Instead, I'm going to apply what's called second level thinking to this situation. What raw material does Tesla need? What component does Tesla need and every other electric vehicle manufacturer in the entire world? Well, first, of course, it needs batteries. And second, what are batteries made of? Well, they're made of nickel. Elon Musk recently stated that the real limitation on Tesla's growth is cell production at an affordable price. That's the real limit, he said, adding that the company would expand its business with battery partners Japan's Panasonic, China's CATL, and possibly with others. Tesla will give a giant contract for a long period of time if you mine nickel efficiently and in an environmentally sensitive way. So which nickel miner could Tesla award this massive contract to? And could it even acquire some smaller junior nickel miners? Well, in this video, we're going to find out as I reveal my top 3 nickel mining stocks you could buy right now. Be sure you guys watch till the end as I reveal a company which already has a contract with Tesla. Without further ado, let's dive in. Welcome back guys to Motivation to Invest. Before we get started, it would really mean a lot to me if you guys can give this video a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, let's get into the video. So why is nickel so important? Well, there are currently over 7.2 million electric vehicles on the road, according to the International Energy Agency. This figure is predicted to reach 245 million by 2030. This represents an increase of over 30-fold. And of course, what will all these electric vehicles need? Batteries. So what are all these batteries made from? Well, nickel. 2 of the most common batteries are nickel, cobalt, aluminium and nickel, cobalt, manganese. These use 80% and 33% nickel respectively. Of course, the more electric vehicles that are required, the more batteries that will be required, and thus the more nickel that will be required. And due to the laws of supply and demand, as demand increases and if supply stays the same, the prices of nickel should increase. However, there is a caveat to this. Stainless steel producers are by far the biggest consumers of nickel, so this will affect the metal price in the market. Nickel is commonly combined with other metals to produce alloys with a combination of properties that provide both ductility and strength at high temperatures. Through its ability to withstand heat, nickel minimizes corrosion, allowing the metal to be used for several decades without replacement. Thus, nickel is used in harsh environments such as jet engines, offshore installations, and power generation facilities. The cost per ton of nickel actually dipped to $11,000 at the end of March, but has since recovered to over $14,000 per ton. Economic factors will continue to feed into this calculation, as will growing speculative investor demand. And of course, we should also mention Indonesia. No, I'm not talking about Bali. I'm talking about Indonesia, which is the world's largest nickel producer. And it recently spooked the market by insinuating a ban on ore exports. The consultancy Roskill, which tracks metals markets, sees this as significant, and it feeds into its forecast that primary nickel consumption will increase by at least 4.4% per year over the next decade. Thus, a substantial amount of new nickel units will eventually be required to meet demand. So now you guys understand how important nickel is, let's dive in to my top 3 nickel mining stocks. Coming at number 3 is VALE of Brazil. This is one of the largest nickel miners in the market and actually the second largest mining company in the entire world. Right guys, so diving into the investor relations report for VALE. Ticker symbol VALE, and they're listed on the New York Stock Exchange. So as mentioned previously, these guys are involved with a variety of different metals. So I'll just scroll down to the overview. So production summary. So they do iron ore, manganese, coal, nickel, copper, cobalt, and even gold, which could be a nice play on the rising gold price. So this is a sales summary here. There's been a large, obviously, decrease since 2019 due to the global health crisis. They've had to put a lot of social distancing in place. They even had to shut some of their mines for a number of days. So nickel finished production by source. They've got mines over in Canada, so Sudbury, Thompson, Voisey's Bay, Indonesia, New Caledonia, Brazil. So they've got a variety of mines, internationally diversified. So let's look at the changes here. So with regards to nickel, we can see here percentage change, second quarter of 2020 compared to the first quarter of 2020, 21% increase, 12% at this mine, 33%. Overall, you're looking at an 11% production increase, which is a good sign in Q2. And the sales only down -4%. So it seems that the economy is picking back up and things are picking back up for the miners. The nickel business reached 94.2 KT first half of 2020. I believe that's kilotons. Correct me if I'm wrong. Well positioned to reach the 180 to 195 kiloton guidance for 2020. So they're really looking to ramp up production when it comes to nickel, even when considering the expected lower third quarter 2020 production volumes due to postponed maintenance. The copper business produced 179 kilotons in the first half of 2020, also on track to reach 360 to 380 kiloton production guidance for 2020. So they're looking really to ramp up each element of the business. So diving into the numbers for VALE, we can see it's a large cap super stock according to Stockopedia, which is the stock research platform I use. Market cap $44.2 billion. Revenue $20 billion. So the quality here, looking at 86, value 72, momentum 61, giving it an overall stock rank of 88. So according to this research software, it's a fantastic stock overall. Share price today currently around $11 per share. It dipped as low as $7 during the 2020 crash, and pre-crisis it was around $13. So it seems to have mostly recovered back to its previous highs. Looking at the revenues here, you can see it's a large cap. Compound annual growth rate only 5.79%. So it's not grew as fast as, say, some of the smaller caps or some of the micro caps, but it is a lot safer if you want to be in this space. Dividends, even pays a nice dividend, 3.25%, possibly decreased to 2.4%, and then an increase back up to 4.34%. So it's got a nice healthy dividend. It's diversified internationally. It's diversified across a variety of metals. So yeah, if you want to be part of the metal industry, then yeah, I'd get involved with this stock. Revenues forecast was increased 2019, slight decrease for 2020. Net profits forecast to increase, and earnings per share. It's great signs to see. Analyst consensus, here we go. Conclusive, 19 buy, a 3 a strong buy on there. So you've got a variety of analysts here. So very bullish on this stock. Current ratio 1.24. Personally, I'd expect that to be higher. That's the amount of cash it's got on hand to cover its short-term debt. So usually I look for around 1.52, but due to the size of this giant, I can't imagine it going out of business compared to, say, some of the micro-cap companies. Price to book 1.9, good value really, and PE ratio of just 8.5. So it's not bad value. It's a well-diversified, large-cap stock. So yeah, that's VALE. Coming at number 2 is Sherrit International. Sherrit International builds itself as one of the largest producers of nickel and has operations in Cuba, Canada, and even Madagascar. Diving into the investor relations report for Sherrit International. Now, as you can see here, just looking at the investor report, the name and nickel, they want to be known for nickel. So they're one of the largest sort of suppliers compared to VALE, who are diversified across a variety of metals. These want to be known for nickel and cobalt. Our priorities: preserve liquidity, enhance balance sheet strength, uphold global leadership in finished nickel, laterite production, optimize opportunities in the Cuban energy business. So this is the amount of cash they had on hand. So this shows their sensitivity to nickel and cobalt prices and how they are very dependent upon the prices of these metals. So as the nickel and cobalt prices changed over time, so did their revenues. Debt reduction, 71% debt reduction since 2016, which is a great sign to see. Nickel market fundamentals, so they're talking about the general market here, 4% growth per year in the stainless steel market, special alloys 2% growth per year, and 33% growth per year for electric vehicle batteries. So they're really aiming at the EV market with their nickel. Currently trading here 0.2 Canadian dollars per share. March lows 0.08, and then previous, so they've close enough recovered back to their previous highs. Diving into the numbers, there won't be much details on these because they are a microcap company and they are a lot more risky. So you can see here revenue 2014. The revenue's sort of been decreasing over the past few years. This could be related to the nickel and cobalt prices, as they alluded to in their presentation. It also could be due with their own mine efficiency. So that is a question which you need to ask. Revenue was forecast to decrease for 2020-2021. Net income is forecast to increase though, and earnings per share, because they seem to be going through a period of unprofitability. They stated this was due to the decline of the nickel and cobalt prices. Analyst consensus, only 2 analysts on this, 1 sell and 1 hold, so there's not a lot of exuberance behind this stock currently. Current ratio 0.44. They also have a lot of debt. So personally, despite this being one of those that could explode, I personally would stay away from this stock. But the reason it's on this list is because it's a microcap and because it's in the right continent. Tesla could potentially acquire this stock and thus it would skyrocket. Coming number 1 is Talon Metals. Now this is a really special stock as its mines are based in North America, home of Tesla. Talon Metals is a junior microcap mining company with its main asset being the Tamarack nickel-copper-cobalt project in Minnesota. According to its geologists, this is a high-grade nickel deposit which is easier to extract. Now this is a big deal because the lower the grade of the nickel deposit, the harder it is to extract, and thus the more money it costs. The better the grade, the easier the extraction, the lower the cost, and thus the higher the profits for the mining company. The asset is a joint venture with Rio Tinto, and Talon has the option to earn up to a 60% interest in the property. Right guys, so diving into the investor relations report for Talon Metals, we can see their Tamarack project here, based in Minnesota, and also the great infrastructure in the USA. So high-grade nickel sulfide, copper and cobalt project that can produce for either the stainless steel market or batteries for electric vehicles. So it's interesting that they stated that clearly on their presentation. Not just another junior with a combined Talon Metals and Rio Tinto team. So what they're basically saying is the general problem with a lot of these junior miners is they don't have an experienced management team. So they've actually combined their team at Talon Metals with Rio Tinto's team to produce a more experienced team, but you're still getting that small cap, micro cap, high reward element of the junior miners. 5 years in development. Talon acquired control and operatorship in March 2019. As of June 30th of 2020, Talon had cash of approximately $5.3 million and has a history of raising capital in tough markets. Predominantly funded by sophisticated resource funds with specific focus on mining or electric vehicles. Over 75% of the shares are held by management, board and institutions. That's quite good. That means they've got skin in the game. They're happy to hold the stock and they want to make the business successful for themselves and also for other shareholders. Management and board have previously developed, built and sold numerous companies that realize significant returns to investors. So basically they've got a track record of producing successful mining operations. Rio Tinto is their active joint venture partner, and the combined team from Talon and Rio Tinto here. So you've got head of exploration, head of geophysics, geology, mine engineers. High-grade sulfite deposits are the preferred low-cost source of nickel, but are difficult to find. So the fact that this is a high-grade deposit is very interesting. I alluded to that earlier. This is an interesting slide on the amount of nickel inside a lot of these electric vehicle batteries. According to these guys, estimated metal ratio by value, so that's not by quantity, nickel 45%, lithium 22%, cobalt 17%, copper 8%, aluminium 7%, manganese 1%. Now I've got a previous video on the lithium miners, so check that video out. I'll leave a link for that below. Nickel currently comprises approximately 45% of the metal value. Range anxiety is an impediment to the electric vehicle adoption. Nickel is the key ingredient to increasing range for electric vehicles. Cobalt thrifting is the process of reducing the amount of cobalt in batteries by replacing it with lower cost nickel, thus decreasing the cost per kilowatt hour of the batteries. Now, Tesla, for example, on many occasions has stated its desire to reduce the amount of cobalt in its batteries. Now, I've got some special information on that, so I'll tell you that on the bonus stock next. In 2016, Elon Musk said our cells should be called nickel graphite because primarily the cathode is nickel and the anode is graphite with silicon oxide, and there's a little bit of lithium in there, but it's like salt on the salad. So that's what Elon Musk said in his own words. It's interesting that they've put these quotes on this presentation because I feel as if they're trying to bask in the light of Tesla. They know the amount of exuberance behind that stock, so by them placing these quotes on their presentation, it adds to that whole excitement. But it is all true, so I can't knock them there. I can't knock their intent. So here we are diving into the numbers for Talon Metals. It says here it's a speculative small cap, which I would agree with. Momentum 84, value 32, quality 53, stock rank 59. So stock rank currently 26 cents a share. He dropped all the way down to, bloody hell, $0.1 in April, March 2020. And now it's obviously boosted right up. I believe that's due to the potential of a deal with Tesla, to be honest. We'll see here. So it's obviously there's not much of a track record. There's not much numbers to go on in terms of studying. Current ratio 0.89. I would like to see that a little bit higher, at least above 1. But it is forecasted to increase its revenue and net income and earnings per share. No brokers are currently analysing the stock. So this is, as it says, it's a speculative small cap. Market cap $83.46 million. And now for a very special bonus stock. Exclusive on Motivation to Invest, this stock actually already has a signed contract with Tesla. The company's called Glencore. Glencore is a multinational UK-based mining company which mines a variety of metals. The deal, which was reportedly signed between Tesla and Glencore, wasn't actually for nickel, it was for cobalt. This has cast doubts on Tesla's company statement, which said it was close to eliminating cobalt from its batteries altogether. The contract would involve supplies of 6,000 tons of cobalt from the Democratic Republic of Congo for Tesla's new Shanghai factory. Now, despite this not being a deal for nickel, as they already have an existing business relationship, it seems likely that if Tesla wanted more nickel, they would just pick up the phone and call Glencore, as they already have this relationship. Right guys, so diving into the investor relations report for Glencore. So this is the 2020 half-year results so far. So we've got the highlights here. Strong performance in challenging conditions. Group adjusted EBITDA of $4.8 billion, down 13% in line with low prices and some CV19 production cost impacts offset by strong marketing performance. Diverse portfolio of metals and minerals is well positioned to support the transition to a low carbon economy. So I'll just show you that this is obviously their general numbers. I won't go into too much detail on these so far. Net debt $19.7 billion, free cash flow $2 billion, net income minus $2.7 billion. See, it's got copper here, so they've got a scorecard for each metal. So they've got copper here, and this shows you the change in production. So as you can see, there's been a minus 11% change in first half of 2020 compared to the first half of 2019. So that's down by minus 11%, as would it be expected as we're in a recession. So that's with the copper there. Zinc, it's up 2.6%. It's interesting to see. Nickel, now this is the metal we're talking about really in this video. Lower unit costs drive stronger nickel earnings. So it's only down minus 0.4%. Considering we're in bad economic conditions, it's only down 0.4%, which is negligible, I'd say. Steady year-on-year production, but the Koniambo ramp up impacted by CV19 delays to mobility of maintenance teams. Chinese stainless steel and EV growth are the current pillars of demand strength. So they're saying the EV growth is increasing this part of the business very well. They've also got coal. This is just their marketing projects and their capex, what they spend, and their balance sheet here. So balance sheet, net funding $36.4 billion, net debt $19.7 billion, liquidity $10.2 billion. So this is their different mine costs. So as you can see here, for each of the elements, we've got copper. Its mine costs have been decreasing, which is a great sign to see. Zinc, that's also been decreasing, which is a good sign. Nickel, that's sort of similar. It's been increasing slightly, but yeah, it's very, very similar. So this is their priorities for the rest of 2020. So of course, health and safety due to the ongoing health crisis, it will affect some of the mine operations. Ramp up development of assets. So successful commissioning of new Katanga acid plant. Koniambo operational stability, operating efficiency and capital discipline, strong balance sheet, stability and consistency of operation financial performance, return excess capital to shareholders, i.e. dividends, be disciplined with our capital allocation framework. So they're going to be cautious but also reward shareholders according to the report. And then here's their different projects. So we've got obviously for the different metals. So the nickel, looking in Canada, Moose Lake, Canada, Norman West, Canada, nickel rim depth, Canada, zinc here, and you've got copper, coal. Diving into the numbers for Glencore, ticker symbol GLEN, based on the London Stock Exchange. Adventurous large cap, currently neutral, stock rank of only 44, momentum 75, value 56, quality 13. 170 share price, it dropped to around 120, even up to 112 during the crash. Pre-crash, it was around 200, 230. So this is a big company. The revenues have been sort of very stable, slight decrease over the past few years. Dividends, so they've got, say, around 1% dividend there, which is a great sign. Revenues forecasted decrease for 2020, 2021. Net income's forecast to increase slightly, which is a good sign on earnings per share. Brokers, 2 sell, 7 hold, 9 buy, 4 strong buy, so more leaning towards the buy. Got people here from Credit Suisse, Morgan Stanley, Barclays, JP Morgan, so more leaning towards the buy there. Current ratio 0.99. That's, I'd say it's just acceptable due to the size of the company. I would expect to be a little bit better. Price to book value 0.85. P ratio 16.7. So there's a lot to go on there. Overall, it's clear that the future is going to be electric, and there are many ways of playing the EV market. So which stocks am I personally buying? Well, one of the unique things about this channel, which you guys will know if you've watched previously, is that I'm very transparent about the stocks I buy and when I buy them. Now this is very unique on this channel, and it's very different to many of the other channels which will tell you all these different stocks and then they won't tell you which ones they've actually purchased. So I'm going to tell you guys. So I've actually purchased Glencore as it's diversified across a variety of different metals. It's a very, very safe bet. It's undervalued and they already have an existing contract with Tesla. Now I also really like Talon Metals if you're looking for that high risk microcap play. But remember guys, this is not financial advice. Investing can be risky, and especially investing into any sort of mining company. So don't invest any money which you can't afford to lose. And now I've got a very special treat for you guys. If you guys would like a free share worth up to £200 or $200, then simply sign up to Trading 212 or Stake using my special links below. Now I know many of you guys have already claimed your stocks for Trading 212, so why not sign up to Stake as well and also claim your stock for this free trading app. Be aware guys that these are limited time offers, and although it seems like a lot of these free trading apps are offering free shares willy-nilly, they seem to have actually been pulling back, because I used to refer another which I won't mention now because they've stopped offering free shares to new customers. So maybe the others will follow suit soon, so use the links below, deposit, claim your free shares, and then you can do what you want then. You've not lost anything. It's free to trade and it's free to sign up and deposit. So there you go. That's just to help you guys out. And also I always get a lot of questions from you guys asking which stock research platform do I use. Now I mentioned this earlier. I use what's called Stockopedia, and I've got a special link for you guys, exclusive for the viewers of Motivation to Invest. It's a 25% off discount link, and I'll leave that below. You can sign up, go on the platform, see what you think of it, and see if it fits your investing style. In addition, if you're interested in more mining stocks, check out my previous video on lithium, which is a key component for Teslas, in addition to my silver and gold mining stock videos, which are currently going through a massive bull market. Even Warren Buffett purchased a gold miner. So check out those videos below. So what are your thoughts on these nickel stocks and Tesla's insatiable demand for the metal? Let me know in the comments below and I'll join in the discussion. In addition, if you guys enjoyed this video, I would really appreciate it if you give it a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock market picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Invest safe.